Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and boy am I late today. It has been a long day today. I've been on the phone with people. I did a phone interview. I'm about to play for you at the end of this video. I'm going to play an interview that I did with Zach over at Token Tax, and he's the CEO, and he went through this whole, he's not specifically talking about Spark. He's just generally talking about airdrops and how this works, talks a little bit about what happened when they did the Bitcoin Cash fork with Bitcoin and some similarities, some things that might not be, but he goes through all of it. And I'm going to play the first 5 minutes of that today, and then tomorrow I'll play the other 10 minutes. But let's start here. First, I wanted to show you this. I said, FYI, now it's Gensler's SEC that doesn't want Ethereum discovery. And I was making the point that from now on, every letter back to the judge trying to continue with this thing against Ripple, this is Gary Gensler's SEC now. And I think it's important that you understand that. So crypto law, this is John Deaton's law firm. He says, just added to our documents library, a very angry letter motion from the SEC to Judge Sarah Netburn asking for an order barring Ripple from accessing key discovery materials. And this is basically a lot of that same stuff about different communications with custodians and about Ethereum and Bitcoin and all of that. So they are trying their best to limit that discovery. Now, I wanted to point something out that came across the other day. Gemini, now remember, the Winklevoss brothers that run this, these guys have been around in crypto since the very beginning. These guys have had more marketing gunpowder. I mean, everybody has known about Gemini. This has been a talked about exchange since the beginning of this whole thing. And I want to make a point here. They've got $25 billion in assets under management. But there was also this that came across yesterday. iTrustCapital announced a huge milestone. Our platform now has $1 billion in crypto assets. Thank you for being on this journey with us. Read our 1Q21 report. I want to show you this because iTrustCapital came out of nowhere. And this is where I have my IRAs. By the way, in the description of this video, you can click on a link and there's you can get like a month off and get a crypto IRA by XRP, or not right now you can't, but crypto, Cardano is an example. But anyway, total assets on the platform over $1 billion, 2021 new inflows, 348 million, total platform trading volume over 1 billion. Unbelievable story right there, because nobody even, I didn't even know who they were more than a year ago. These guys are killing it. Okay, Coil, this is a tweet that I forgot to show to you today. I think this was yesterday. We are bringing web monetization to Samsung Internet. Galaxy users can now enable Coil in the Samsung browser to activate streaming micropayments to support their favorite creators, developers, publishers, and platforms in real time. Okay, now this was something I found from Gary Gensler right here. Okay, this is MIT. Okay, this was written, Capital Formation in the Age of Blockchain. This is from 2000, where's the date here? Anyway, it's 2018. I don't remember where the date is. But look at this. I wanted to show you this. And I said, do you think your ICOs are safe? This is right here. According to Gary Gensler, former chairman of the Commodities Futures Trading Commission and visiting professor at MIT, a large majority of the ICOs which have been executed in the past could be considered securities according to the Howey test and would thus face heavy penalties if they hadn't previously been registered as securities. So any of you out there that thought you did an ICO and that you got away with that without any repercussions, you're on notice. That's from 2018, and he said it, or they were talking about what he said. Now, I wanted to talk about this flare thing as I go into the video with, man, even when I was talking to Zach today, I drew Zach McClure, that's his last name. I was drawing a blank on his last name. Anyway, so David Schwartz was having a dialogue on Twitter about this whole token flare, the potential of the airdrop and the ordinary income tax issue that it could create. So I decided that I would reach out to the guys at Token Tax who do nothing but have crypto tax platform. And but I want to show you this first. Hugo Filion, who's the CEO of Flare, had mentioned this this is talking to David Schwartz. We will release what we can on analysis we've received in a format that does not give specific tax advice. Until that time, myself or Flare won't comment further. Many will likely follow your lead, hence you wish to consider more fully the veracity of your comments. Now, here's what I want to bring this up because it's important. I love what Flare's doing. This is not something bad about Flare. This is a tax issue that we need to talk about any airdrop going forward, because everybody needs to be thinking about it and be aware of the potential consequences. That is the only reason I'm talking about this, and I think it's the only reason David Schwartz is talking about it, only to address the issues, because if you don't prepare for the potential, then it could get people into trouble. So it has to be, it's not about Flare, it's about this tax issue that's going to happen with airdrops, or when you get tokens, and it has to be something that's talked about. It is not, we're not saying anything bad about Flare themselves and what they're doing. We're all on board with that, the platform and everything. It's more, from my angle, it's more of something that's bad about the way the IRS is treating this. It's not something bad about Flare. And then Mickey B. Fresh had weighed in on this. And again, I'm not talking because I am at odds about anything having to do with Flare. It's about that we need to know information on the tax issues that are around, whether it was Flare or some other company doing this. This is my dad brought this up with me. My dad's old school. He brought it up because these are important things when you are, especially if you're going to come into windfall of any kind of money, you always have to look at the tax issues involved. Now, I'm not an accountant. I'm not an attorney. I'm not any of those things. So I'm just telling everybody out there, they need to take the issues that are being brought up and go talk to your accountant and your attorney. That's all that we're saying, because I am not an accountant or an attorney, and I'm not a financial advisor either. I'm just telling you some of the issues that I am addressing myself, okay, for myself. But Mickey B. Fresh had called, called me and Brad out on this and said, be careful listening to these accountants on Twitter. Be mindful that all the details have not been released. XRP community needs to have patience and not jump to conclusions. Well, here's the problem with that. These, and again, I like Mickey B. Fresh. I'm not trying to attack him either. That's not what this is about. But we're trying to make the point that we need to know the answer to what I lay out down here. He's tweeting this out about how their analysis as commission does not lead to the conclusion that there's multiple distributions. Well, there are going to physically be multiple distributions. The question is whether those are going to be treated as a $0 for ordinary, as the value being $0 for ordinary income tax purposes for that Spark token when you get it. And I told him, I said, I'm listening to a lot of smart people. I'm not just listening to some guy on Twitter. That's not by any means what I've been on the phone with several people on this, including the interview I'm about to show you. I'm listening to a lot of smart people, not just an accountant online. This could be cleared up easily. Is the tax basis $0 on every Spark token to be dropped regardless of when? That would get rid of the issue. I understand patience, but taxes have to be planned for. And again, I'm not trying to be argumentative with Mickey B. Fresh or anybody else. I'm trying to find the answer, and maybe we don't get an answer. But if we don't get an answer, then we have to think about how we will handle it going forward. So, like I said, Token Tax is the company that Zach McClure works for. I I wouldn't call them a sponsor. I'm a member of their affiliate program. I have links to this in my description, but they're not a sponsor per se. But Token Tax does have a great tax software. You can click on a link in this description and go to their platform, and they help you do your crypto taxes. It's a really good platform. Now, so Zach McClure is the CEO, and I'm about to play you his video on the tail end of this. But first, I'm going to say I'm the digital asset investor. I'm not an investment advisor. I'm also not an accountant or an attorney. You need to go talk to yours about all of this. So anyway, I am the digital asset investor. I'm not a financial advisor. This is for entertainment purposes only. Please subscribe, hit the like button, tell your friends and family that they need to listen to Zach McClure and what he says in the video that I'm going to play right now. Thanks for listening.
First off, obviously, this isn't tax advice. Consult with an attorney or an accountant, and all this stuff is kind of a gray area as we're in uncharted territory. But I think some of the closest proxies that we have are the IRS gave guidance a couple of years ago around airdrops in particular, where they said, yeah, it's ordinary income of the fair market value in dollars at the time of receipt. And then, as a lot of people have pointed out, say you receive $2 million worth of tokens, and then the price drops a lot, God forbid, or whatever happens, and then you sell it for 500,000. Well, yeah, you have $2 million in ordinary income, and then you have a $1.5 million capital loss, which does not cancel out ordinary income. So you actually might owe the IRS, $800,000. Meanwhile, your stack is only worth 500K. And now you've got this $1.5 million loss that you can only use 3,000 of per year. And then that rolls forward each year, for however many years. You could do the math on that. And it also gets used up by future capital gains. So if you have a really big year next year selling crypto, you have a lot of capital gains. Yeah, you can use that shield. But if you don't, you basically just use 3,000 per year. As you can see, it could be for hundreds of years here as we're projecting out if you have such a big loss. And so that's like the worst case scenario. And, I think, we've been asked, all right, if you receive it and the price is zero at that time, that's a little bit of an interesting issue, because who's saying the price is zero, right? Like the company and the recipient, everybody wants the price to be zero, but look at Bitcoin Cash, and as an example, they did that fork, and then it happened in, I think, August 2017. And then a weird thing happened where a lot of people didn't receive the Bitcoin Cash until December, when it was at a way higher price. It dropped into people's accounts, and then a lot of people were selling it. Some people were locked out, but it's like, which date was the income recognition actually used? And so let's just say that, for argument's sake, everyone decided it should have been in August. Well, then there was a lot of discussion about, all right, do you take some of the cost basis from your Bitcoin when you originally purchased it and allocate it? Or do you take, just the value? Let's say it was worth $65 when you got that Bitcoin Cash. Is that so in the simplest way to think about it, the value when you receive these tokens is ordinary income. That becomes the cost basis. And then when you sell it, the difference between those two prices is your capital gain or loss. So hopefully you receive these tokens. Let's just say they're worth $1 each when you receive them. That would be ordinary income. Let's say you got 10,000 of them. You'd have $10,000 of ordinary income. Let's say you sell them 6 months later for when they're worth $15,000 total. You'd have a $5,000 short-term capital gain on top of that. And so, one of the biggest things that you want to think about is holding these for at least a year. And, we kind of talked about they're dropping, or people ask, like, they're not dropping it all at once. Like Bitcoin Cash was forked all at once. It's more like they're going to drop it over time. So your holding period probably starts each time you receive it. And one of the concerns might be that, again, it's a gray area, but if you receive 15% of the tokens, here in June, and then after that, they drop 5% every month, when those subsequent tokens are received, you might have income of whatever amount the price is trading at. You could just go to CoinMarketCap or whatever, see what the Spark token is trading at, and that might be your income. Let's say it goes up to $2, and you receive, you know, another 1,000, well, you have $2,000 income that month. And remember, you owe taxes to the IRS quarterly within the year that you're receiving this money, or you have to meet your safe harbor for the prior year. So that's another piece to layer on here where, you know, talk to your accountant or your attorney, but the IRS doesn't want you to wait till the end of the year before paying them. They want you to pay them quarterly throughout the year for the income you're receiving. Those of you who are self-employed probably already know this.